Welcome back to another Trade Journal video. This is Trade Journal number 19. I'm going to start off by talking about the trades I had for this past week and then jump into what I've got going on for next week. So similar to the past few weeks, I'm still in this Peloton trade, trading a covered call. So as you can see here, I own Peloton at 130.91, slightly unfortunate since it's kind of high up. But I just keep selling the call. So this past week, I sold a call on Wednesday, so that would be 11:25, right around here at the 125 strike price for a max profit of $60 expiring today, Friday, December 4th. And as you can see, the price did move up, but it stayed pretty far below my 125 strike price, so I got to keep all of the premium and I did not get assigned on the position. So that's $60 realized profit for this week. Now kind of jumping into next week's trades. Now that the price has kind of moved a bit higher, I have the luxury of being able to sell a call further away. So for this next week, the trade that I placed today was selling another call expiring next Friday, so on 12/11, so right here, for a max profit of $50. So let me go ahead and move this red line to where the new trade is. And I sold this at the 130 strike price. So the nice part about this is, there isn't really much management or adjusting needed. If the price goes above 130, I'll get my stocks taken away for a small loss, the difference between where I own the stock and where I sold the call, which I'm okay with because I've been in this Peloton position for quite a while and have been kind of collecting premium. I believe we're up to about $1,600 in premium being collected, so it's okay to take a small loss like this just to get out of the position. And worst case, I could always roll it to the 131 and then hopefully get assigned above that. And as always, if the price stays below, I'll just keep my premium and then sell another call for the next week. Now, to jump to the new position that I took this week, a little bit more risky on ACB. So this is a cannabis stock, and there's been a lot of news around kind of the cannabis field in terms of kind of decriminalizing it and things like that. And ACB has pretty high volatility, so a lot of the premiums are really good. I got into a trade today on ACB, and what I ended up trading is called a fig leaf or a synthetic covered call, similar to a regular covered call, except instead of owning the stock, you own options on both sides. And I'll do a video in the future kind of explaining how to trade a fig leaf or synthetic covered call and how I'm kind of trading that. But to kind of break it down, I bought a deep in the money call option at the $4 strike price for about $735. And the reason you buy it deep in the money is because, one, it's deep in the money and has a long expiration, so this won't expire for 196 days, is because it requires less capital than buying 100 shares of the stock. So if I was going to buy 100 shares of the stock around $11, I would need $1,100, whereas by doing it this way, buying a deep in the money call option that has a very far out expiration and a high delta, I only had to spend $735 and it'll still move very similar to the stock. So I bought that option, which is going to move very similar to the stock, and then I sold a call option at the 1150 strike price, which is above my break even, for a max profit of $107 expiring next Friday. So let me go ahead and put in a line for that. So as you can see by this red line, as long as the price stays below this point, I will get to keep all of the premium and nothing happens on either side. If the price goes above this, I get to keep the premium and I get assigned a short position, and then I can close out my two positions. So it's similar to a covered call, except it requires less capital up front because you're taking on the risk of having a call option that has time decay and things like that, but it does require less capital. And just looking at this position, it has a max profit of $107 for next Friday, and the max loss on this position is $735. So just looking at those two, that's already a 14% return in 1 week, which is really good. And let's say the price does go down, I can now sell a call even lower because I have a little bit of buffer based on the profit that I made this week. This is definitely a more risky trade given how volatile ACB has been, but because it is a slightly lower price stock, I think it's a certain amount of risk that I can handle, and I can continue to sell calls against it because this long call has a lot of time till expiration. So as always, I'll keep you updated on how these trades go. I think the Peloton trade, very safe. The ACB trade, a little bit more risky, and I'll keep you updated to see kind of if there are any adjustments needed or what happens by the end of next week. And as always, feel free to leave any comments or questions down below, and I'm happy to kind of go deeper into certain topics in future videos. And don't forget to like and subscribe. I'm trying to get to 100 subscribers by the end of the year, so let's see if we can make that happen. And as always, I'll see you next week.